You may have read some recent headlines that say buying a home is nearly impossible. Now, what if we told you that you can do it even as early as your 20s? Well, on this episode, we are going to give you an actionable game plan in order to help show you you can buy a home in your 20s. Hello, and welcome back to the Happy House Hacking Podcast. We are here to dive deep into a growing trend among young people, especially in their 20s, on how to buy a home in California. So house hacking is all about buying a property, living in one unit, renting out the others as a way to offset all of your expenses and your mortgage. Now, if you are in your 20s and you are wanting to dig deep into how to buy a home, this episode really is for you because we're going to talk a lot about the house hacking strategy and how to make it work for you. So, Owen, what are some of the best tips that we can give to all of our listeners who are in their 20s on how to stay local in California and buy a house?
Yeah. So the number one thing we're going to start off talking about is overcoming the limiting belief that I can't buy a house.
Yeah.
And this is really common among young people. They think, I can't buy a house because I don't make enough money. I can't buy a house because I don't have enough saved for down payment. I can't buy a house because it's just too expensive. And other people are telling me I can't buy a house. It's impossible. And so this type of thinking limits you from achieving your goals and dreams. It limits you from succeeding in achieving that goal that you have for yourself. So I think of this one quote by Henry Ford, the guy who invented the Henry Ford automobile, which made owning cars attainable for pretty much everyone in America at that time. He invented the assembly line and totally transformed the business for the auto industry. He said, whether you think you can or you think you can't, you're right. And it just shows that it all starts up here. It starts in your thought processes. If you say, I can't afford it, that's where your thinking stops. Your creativity is capped. And that's where it ends. You can't imagine yourself getting into a home.
Exactly. So we need to overcome those limiting beliefs. And that's why we strongly believe house hacking is the way to do that. Because yes, buying a house in California is really expensive. Owning property in California is expensive with property taxes, insurance, etc. Mm-hmm. Having a way to offset your mortgage every month is going to be the key to success, especially when you're just starting out and you can be really uncomfortable because you don't have a husband or a wife or a dog or other animals to take care of or kids. You are just you and yourself, and you have a way to be able to sacrifice a smaller living space in order to build wealth over time.
Absolutely. And we were there just a little while ago, young, in our 20s, wanting to buy, not knowing how, not thinking it was possible at sometimes because things are so expensive. And that's why the house hacking strategy is the strategy for helping young people get into homeownership. That's why we're so passionate about this topic. That's why we created this podcast. That's why we do educational tutorials and consultations with first-time buyers all the time to help them get the knowledge they need to succeed in achieving that. Using the house hacking strategy is the way to go.
Mm-hmm. Yeah. So first piece of advice we give is just overcome those limiting beliefs. Don't let people tell you that you're too young to do something. You can do whatever you want as long as you believe you can. Mm-hmm. So the second thing would be to start educating yourself. Start listening to podcasts. If you're listening to this show, you are already one step ahead of everyone else. Mm-hmm. You are in the market. Start meeting with realtors, interview realtors, get a buyer consultation scheduled on the books, meet with the lender, find out what your purchasing power is. All of these things that we've talked about in previous episodes, you're going to want to start implementing. And keep in mind that if you are, let's say you just turned 20, 21, you just graduated from college, you're starting out your first career, well, you might need to wait a little bit more, maybe 6 months to a year to build your income in order to qualify for a loan. But the good news is that if you are working in a field that relates directly to your major, that helps. versus, let's say you majored in something that you're not using anymore. Then maybe you majored in biology and you work in marketing. Well, that doesn't really pan out well with underwriters. They think you're going to be a little bit more risky than another buyer who majored in marketing and is still working in marketing. So keep that in mind, that you might need to be 22, 23 after you have a couple years of experience under your belt in order to qualify for that conventional loan.
Right. House hacking is a strategy that can shortcut you to homeownership because it gives you extra income off of the property when you buy it. However, you still need to have income. You need a job. And if you're a self-employed person, you're not going to be able to use that income for 2 years. So that's why it's important you start now getting verifiable sources of income. That means don't get paid under the books. Don't get paid cash, because if you do, a lender isn't going to see that as a verifiable source of income. So whatever you're doing right now, even if you're wanting to save on taxes because it's cash, it's under the table, you need to get that legitimized so that way you have verifiable sources of income that a lender can use to help you qualify for a home purchase.
Exactly. That is critical. That's a really good reminder, because we don't ever want to encourage people, especially just starting out, to accept cash as a form of payment. You want to be on the books and report it on your taxes, so that way you actually can qualify for a house.
Yeah. And then another tip in this same vein is just getting your financial house in order is so critical. And so along with that, you'll want to have a budget. You'll want to pay down debt, stay out of debt, and get your debt to income ratio in a good spot. And as far as your credit score goes, that is a big consideration. A lot of banks are going to take a look at that and decide whether or not you're credit worthy, meaning whether or not they trust you with money. And so here's a quick tip on your credit score. And this tip has helped some of our clients and friends jump their credit score 20, 30, 40, 50 points in a very short period of time. And we have a whole guide we can send you more information on if you're interested. But here's the quick tip. Make sure your credit utilization limit is 30% or below. What does that mean? Let's say you have a credit card with a $10,000 maximum balance. You want to make sure that you don't utilize more than 30% of that balance or let that balance sit there for a long period of time. So that means you could borrow up to $3,000. And of course, we always recommend pay it off right away. But whatever you do, try to stay underneath that $3,000 credit card utilization limit, because then that will show you have access to credit. You're not using it all. And therefore, the credit card companies deem you as responsible because you're not maxing out your credit cards all the time.
Exactly. That's a really good reminder, because you don't want to be opening up all the credit cards that you're getting presented with when you go check out. Open up the TJ Maxx card, open up this card. Just don't do it. Just avoid it. And maybe you just graduated from college and you have student loans. And if that's the case, that you need to show that you have good credit worthiness, because you are paying off your student loans every single month. You are on time with your payment. Maybe you're paying extra in order to pay it down faster. Whatever that looks like, you really want to get your financial house in order. So that way you can qualify for more and buy that multifamily property.
And along with that, just be cautious when you have credit cards, and be very cautious opening multiple ones, like Camille said. There's a story I know of a young person who was buying their first home in California, and they had a credit card they forgot about, and it had like a $20 balance on it, and that they didn't pay. And because they didn't pay it, it was hurting them. It showed that they weren't making payments on their credit card. Even though it was a $20 balance, they could have paid it off right away. The bank didn't want to give them a loan, and so they had to switch lenders in the middle of the transaction. They almost didn't get the house. So make sure that, number one, you don't open up a ton of credit cards, and make sure you always pay them off every month.
Exactly. Yep. And maybe you're looking for more income, and maybe you start a side hustle, right? You pick up a night job, whatever that looks like. You are doing whatever it takes to pay off your debt, increase your credit, and make extra money in order to fund your down payment. Another thing too that we strongly recommend, aside from doing what you can to make more money, is to create a budget and stick to it. And that means cutting your expenses. So are you eating out a lot? Are you buying coffee a lot? Those things really add up. And this might be a very eye-opening experience, but I strongly recommend you do this. Okay. Look at all of your expenses from the previous month and add them all up. And that is where you're spending all your money. I know when we've done this, we're always shocked at how much we spend at Trader Joe's. We're like, wait, really? We spent that much money? How is that possible? And we were there 4 times. How does that happen? And you think about it and you buy all those fancy cheeses and it adds up really fast. So then the next time we go and we're a lot more conscientious and say, okay, we are sticking to this budget, right? And that's what you need to do is you reflect on where you've been spending your money, because for whatever reason in our minds, we're always thinking it's less than the reality. So exercise, my advice for you to do when you get home, take a look at all of your expenses for the past month, because that will help you determine what your budget is for this month. Cut your expenses, stick to it, find a way to increase your income, make sure you're getting paid on the books in order to report your income so a lender will be able to qualify you. And that is how you'll be able to get pre-approved for a loan.
Yes. Now, another thing about being young when buying your first home is you can step outside your comfort zone a lot easier. Instead of viewing being young as a liability, view it as an asset. Tell yourself, I could do anything for a year. I could live in any place for a year, and start to make a plan for maybe buying a property that's in a more affordable location. And when you're young, it's not such a big deal to drive a little bit farther or have to commute or be on the outskirts of town or maybe the town over even. And so when you're starting to look for properties, be open-minded to more affordable markets and use your youth as an advantage, because you don't have a family, you don't have a school district to worry about quite yet. Those are things that you can use to really hone in on areas where you can get a better deal.
Exactly. And the sooner you buy, the better you will be in the long run. Because let's say you're 25 and you buy your first home, 30 years later, if you go the traditional route of keeping that mortgage for 30 years and not pay it off early, you're going to be 55. 55. That's so young. And you'll have your property totally paid off, cash flowing 100%. That's incredible. And it's because of the work that you did now and you sacrificed for a short amount of time in order to see big rewards.
Totally. So far, we have addressed the mindset that you need. We've addressed how to get your financial house in order and earn more money and get your credit right. And so now let's talk about the practical steps to actually qualifying for the financing and buying that property.
Yeah. So the reason we love the house hacking strategy so much is because you go in as an owner occupant. So you go in, you take advantage of the low down payment and the low interest rate, the low homeowners insurance policy. Everything works out in your best interest if you are going to be occupying this home as your primary residence. So there are loan programs that allow you to put as little as 3.5% down. So you don't need to go in with the investor loan of a 25% down or more. That's why the house hacking works, because you get in with as little as possible. So FHA loans are an area to explore, and down payment assistance programs. Those are really becoming so popular right now, especially for young people and first-time home buyers.
In California, there are so many different programs. Cal Housing Finance Authority has one. Golden State Financial has another one. There are multiple different loan programs. We have a whole flyer on 4 different programs designed to help people get into homeownership. And not all of them are for first-time home buyers. So you could already own a home and take advantage of these down payment programs. You just need to know what your options are. You need to explore how much does it cost? What are the fees associated with it? And what's the how do you pay back the down payment grant? Typically, when you sell or refinance, you do pay the state back what they invested in you in the down payment.
And other options also include going in with family members. Maybe you have a brother or a sister who's also looking to buy a home. Maybe you go in together. I know we have clients who their very first home purchases, they bought with their siblings, and it's set them up for life because they've been able to use that equity and that position in order to buy their next home and then their next one. So look at what your family is doing, have those conversations, and see if there's a way you could partner together to pool your resources so it doesn't all fall on you if you are really needing to add more money to your down payment.
Yeah. Some of our clients, they were two brothers, first-time buyers. They took advantage of the CalHAFA down payment assistance program, and they got in at a great time in the market. And they are building an ADU on their property now so that they can rent it out and help pay the bills. So that's how they're house hacking. And they got started using the California Down Payment Assistance Program as well.
Yep. Every once in a while, we'll come across some rent to own opportunities. Now, definitely heed with caution because you want to make sure you know exactly what you're signing up for. But every once in a while, a landlord is going to post a property for rent and say, hey, if you rent this, I'll give you the first option to buy it in X number of years. So that could be an option to explore too, where maybe you're getting in, you still are working on your credit, you're still working on saving more money, and you're building up your financial house. Well, you still need a place to live. And maybe you work it out with the landlord to buy the house in 2 years once your financial house is in order and your rent payments you're making for those 2 years help go towards your down payment or towards a principal payment at some point.
Yeah. So rent to own is pretty unique, pretty rare. We do see it. We even had a listing in the last year where the owner was open to rent to own as an option for selling it. So they do come up. And essentially the way it works is you pay a little bit of like an option fee. It's a down payment essentially that goes towards your option to buy it at an agreed upon price. And then you make those payments, and a portion of it typically goes towards an equity position in the property. So a year, 2 years from now, it would be easier for you to qualify for that property because you already have an equity stake in the property, which is really nice.
Yeah. So if you ever come across something like that, like I said, heed it with caution. Talk to a real estate professional about it first before just signing up for it. You want to make sure you know exactly what you're signing up for. And then one of the last things that we've seen quite a bit more often than the rent to own are creative financing options.
And this is something we love. We love owner financing, seller financing, and it's a really great opportunity because instead of going to the bank to get a loan, you're basically going to the seller to get a loan. And so it's totally negotiable. Everything's negotiable. How much down payment do you want to put up? How much is the interest rate going to be? And how long is the owner going to carry the loan for? So you can really structure a deal that can be a win-win because for the seller, they sell the property, they get a down payment, and they get monthly payments. So it's totally passive income for them. And then there's also some tax benefits to a property owner selling in this way, such as deferring a capital gain. Instead of paying big capital gains tax up front, they spread it out over time and they earn interest on their money. So if you structure it in the right way, owner financing can be a great way to make a win-win deal for a seller and help you as a buyer who may not have the highest income or track record get into owning a property.
Yeah. So all of this to say, there is a way for you to stay in California and buy a home in your 20s. You just have to believe in it and you have to really be educated about how to make it happen. So those are the biggest takeaways that we want to leave you with is that really, if you believe it, then anything can happen. And it just comes down to you being gritty enough to work for it and sacrifice comfort over profit for a short time. And then you'll be able to build wealth in an expensive state that seems impossible, but you've overcome that because you have the right mindset and the right attitude and you've worked hard to make it happen.
Yes, thank you all so much for tuning in to this episode of the Happy House Hacking Podcast. If you want to learn more and take that next step on your happy house hacking journey, reach out to us, send us a message. We are happy to meet with you at our office or even hop on a Zoom call sometime and chat more about buying a home, selling a home, or investing in real estate. And so we're here for you on that journey. We believe in you. We know that you can make it happen. We've done it, and we know that you can do it too. So thank you so much once again for tuning in, and happy house hacking.